All right, guys, so today we're talking about essential session number 8, the financial basics, although there won't be anything basic about this particular session that we're having. I think the financial side, there definitely are some things between the MREA models, which if you haven't read the MREA book, you definitely want to go through the section on that. Actually, I may reference it if you have the book, and I know everybody's like digital and stuff now, but in the book, we're going to be talking about, I think it's pages like 130 something. Let me see if I can find it here. So we will be referencing the financial model, and I'm just going to pull that up. I should have left it up earlier when I had it pulled up. Financial model. Maybe it was like 170 something. There we go. And 193 is one of the pages that we'll talk about. And I think there was one other one. 193 is basically what we're going to be talking about in today's session. And the little bonus is that actually one of the first chapters in the book on the E-Myth real estate agent that I wrote with Michael Gerber. Chapters 3 and 4, we talk about money. And this is probably one of the more pivotal parts of my business that when I figured out this money thing, it made everything so much easier. And what I find throughout the years of being a MAPS coach and coaching people, you would get this spreadsheet of all these things that you're going to track. And this is like a little preview of it. All these different things you're supposed to track on where you're spending money, how many leads you generate, how many dials, and we give this spreadsheet of like 30 different things to track. Well, if you haven't tracked anything before, you might even just need to track one thing to begin tracking that one thing, to be able to track 2 things, and then to be able to track 3 things. So in today's session, we're going to talk about a simple way to know your profit and loss on your business, then to manage your business money, and to avoid the trap that 60 to 80% real estate agents get into, where they bomb out of real estate after 3 to 5 years because they weren't business people. They didn't manage their money properly. I mean, the obvious thing that we're going to talk about today is taxes, but we're going to talk about a lot more than that and how to manage that. So the first thing here is just your perspective on money. And in the MREA models, this has been put together by 28 agents that make $1 million selling real estate. These people were interviewed by Gary Keller, and he found out the common things about all of them, and he created the book. So the book is a model that you want to follow. And there's several things that we want to touch on about money. The first one is setting a big profit goal for your big life, like determining what your profit is. And this is a sample sheet that's in the handout today, where you get to figure out, what is it that you really want in your personal checking account or spending account that's going to fund your life or fund whatever big life you have, right? But you got to almost work backwards to figure out how much income you really need to make every year from a gross commission standpoint, because commission comes in and then all these little things come out of it, and then you end up with an amount at the end. So what a lot of real estate agents do, and probably more so the 60 to 80% that might fail out after 3 to 5 years, is that they just kind of collect the money, throw it in their account, and then they pay for everything out of one account. And we call that commingling your business expenses with your personal expenses. Yet a lot of real estate agents, and what I talk about in the E-Myth Real Estate Agent is, well, what Gerber taught me in E-Myth was that you are separate from your business. Your business is separate from you. You have a real estate business, and you are working in that real estate business. And this is going to be my suggestion that you put this through this filter all the way through. This is how I coached all the top real estate agents. It's how I built an expansion team probably 20 years ago in Lincoln, Nebraska. And knowing that you are separate from your business and you are doing roles inside your business. If you're an independent agent at the moment, you are doing all the roles of everybody you would have as if you were at the 7 levels in the Millionaire Real Estate Agent book, and you were completely out of the business, but you're really in the business doing the different roles at the different levels. So you're basically, if you think of it this way, managing your money and paying out money and all that stuff in your business. If you will take off the hat and change the hat to whatever role you're playing. If you're doing administrative stuff, you're working at whatever you think you would be paying your first admin. If that's $10 an hour, $15 an hour, whatever it might be, the best way to put this money thing into perspective is anytime you are processing contracts, you are tracking the hours at $10 to $15 an hour, or whatever you would pay, right? So track that, and that should be what you pay yourself at the end of the day. So you might have a $5,000 or $10,000 commission check, but if you spent 8 hours on $10 an hour work, if you spent 8 hours on $10 an hour work, you just made $80 of that total commission check, not the whole commission check, because you are separate from the business. The business has the whole commission check. What did you do in that role? When you are showing houses, you're in that buyer agent role or a showing agent role if you've really adopted some of the MREA2 models, right? So what do you pay a showing specialist? Is that 10% of the commission, whatever? So anytime you're showing houses, you're earning 10% of that commission when it closes. If it doesn't close, you don't get paid anything, but that's going to happen either way. If you're writing the contract as the buyer's agent and writing up the contract, then you're getting paid as the buyer representative. So you might be getting 10% of this and 50% of this if your buyer agent splits are 50%. And if you're showing houses and listing houses, I don't know if you know this, if you've read the MREA book all the way through, one of the things that they show is salaries. They show a salary, wait for my camera to focus here. They show a salary on the listing agent side of 100,000. They show the buyer's agents at 600,000. Now understand, this is making $1 million. So this is generating $2.4 million in commissions. So another way to look at this, if you're fairly new, is 10,000 and 60,000. Just take a zero off. So if you were going to make $1 million, well, if you wanted to make $100,000, then you would be paying a buyer's agent $60,000. So that's another way to look at it, is just drop a zero off the back side of everything. Now, a listing agent, if you're making $100,000, you're not going to be able to pay a listing specialist $100,000 because you didn't make $100,000. So that salary would change. You're actually not going to get somebody to be your listing specialist if you're only going to make $100,000 profit, which is a lot of money. It's better than going to getting a real job, isn't it? You got a lot of flexibility, and you can make $100,000 without working real hard in real estate. You do have to do the right work, but you wouldn't have to sell 100 homes to make $100,000. If you sell 100 homes, you're making $500,000. So if you want to make $100,000, you might need to sell 20 homes a year, 2 a month, to make $100,000. Well, at 2 sales a month and maybe 2 or 3 listings a month to get those 2 sales a month, you're not going to be able to hire somebody for $100,000 to be your listing specialist and go do that for you. In fact, if you tried to pay yourself, like I just said, if your business is separate and you wanted to pay, you want to be the listing specialist and you list 2 houses a month and you get to $100,000 profit and you pay yourself $100,000, your profit's zero. So the break even for a listing specialist making $100,000, and if you did that after all your expenses, you made $100,000 just from your listings, then you know your break even is 20 listings. So you're probably not going to bring a listing specialist into your business until you're around 40 listings or 50 listings, where they could take you to 60 or 70 or 80 listings. So I know I'm talking like bigger picture here with teams and all that other stuff. Whether you have a team or not, You want to think of your business in these terms. And the suggestion that I would have is to always pay yourself doing whatever role you're doing at the rate you think you would be paying somebody if you were expanding your team. And you might not know what that number is yet. You might be too new in real estate, but you're not paying yourself 100% of the commission, or the business has no money to operate with. So we're going to break that down. And the way to do that is figure out how much you want to make and then work it backwards based on what the average commission check is and how many sales you would have to get enough, generate enough income to make that sale. And on this model here, when you see that they're generating over $2 million to net $1 million, it's 2.4 million to net $1 million. That means that they spent 60% of what was made in expenses. So number 2 on here is to estimate, save, and pay for your taxes on time. Now, when the business entity, I'm going to share with you a really simple money formula here in a minute that you can get control of your money early on in your real estate career, and you could actually determine if you were profitable or not every single month. It's very, very simple, and we'll talk about that in a minute, but most agents do not set back for taxes. And really, by the time you start looking at what you got to set back for taxes, it's like, holy crud, I'm hardly keeping any of the commission by the time I'm all done with that. Sorry, I've been talking all day. And so the other thing to think about taxes, though, is that when you work at an employer and they collect the taxes and they send that in, usually people get excited about tax refund day. Well, in tax refund day means the government took more money from you throughout the year out of every check you were getting as an employee, and they owe you money back, but you let them borrow it for free. They don't pay you with interest. So you're actually just getting money back that you shouldn't have let them have. You should have zeroed out with them so that they don't owe you anything and you don't owe any more, and you all break even. But instead, we're all excited to get $1,000, $1,500, $2,000 back. And they've been making money on that $2,000 the whole time they had it from you for free. When you're a self-employed agent, nobody's coming to take the taxes out. So if you're putting 30, we say put like 20 or 30% aside, whatever tax bracket you think you might be in, which means that if you get a $10,000 check, you're going to put $3,000 aside and not even look at it. It doesn't mean that by the time you write off expenses, if you have a great accountant and they help you write off things, that you can get your 30% liability down to 20% or 18%, then you're going to give yourself a refund at tax time because you saved more money in your tax account than what you really needed. The good news is that you lived off of the balance and you still had your lifestyle there to support your lifestyle and everything that you're doing. Making sure here I didn't lose everybody. All right. So you'll get yourself a refund back if you paid in too much on that. Use the proven models and systems of the MREA chart of accounts. So if you have a copy of the book, in the very, very back, there is a chart of accounts. And that chart of accounts is a proven model that Gary has found the commonalities between all these agents that had $1 million. And it's about 10 pages long of all the things that you want to track. Now, that's very, very advanced, having a P&L, profit and loss statement, for agents that are just getting started or really just starting a small team or whatever it might be. That may be too much to track. So like I said, we're going to actually cover a very simple method for managing your money and managing your profit. And then be fiscally savvy by reviewing your financials monthly. Again, the simple formula I'm going to give you today is so easy. You could check it every single month and know what your profit is. It's going to be real easy to understand. Pay yourself a salary. When we set up these accounts that I'm going to tell you about and how simple it is, you will actually be determining what your rock bottom core amount is that you need to keep your electricity on and food on the table. And that's going to become your salary that you're going to pay yourself out of every commission check. So when commission checks come in, you're going to actually pay yourself a minimum salary. Now, I will say that if you can pay an accountant that has payroll and will pay this to you, they will actually pull the taxes out and pay them every quarter for you. It just stinks because you got to pay $100, $200, $300 a month for somebody to manage this stuff for you. So it's just another expense on your business side that's coming out of your capital for your business to run your business and to have profit. And then the last thing here is prepare now for a financially secure future. And again, once I show you these simple accounts that you're going to set up, once you see what those simple accounts are and they're set up, you will know how much profit you have left over every single month after you've paid all your expenses and everything through really technically 4 bank accounts. And that's going to manage your whole business and your personal life and everything. And once you get to the point that you have money left over in your capital account for your business, so your business is collecting all the commission dollars, all incoming dollars, and then you're going to pay out of that what covers your business expenses, your personal salary, that kind of stuff, right? Whatever's left over in your capital account is your profit. Now you can decide to do whatever you want with that profit. Is it investing in more real estate? Is it investing in a marketing plan to generate more money for your business? Whatever it might be. And also when you start managing your money with these 4 accounts that I'm going to share, and it's what I share in chapter 3 and 4. I actually share it in chapter 4 of the E-Myth Real Estate Agent. When you get that set up and you're managing your money, I forgot where I was going with this about investing. Well, dang it, I forgot where I was going with it. But you're taking that profit and you can invest it in something. Oh, it's about return on investment, tracking your dollars. When you're paying out those expenses out of your profit, and if you're cleaning your capital account out to pay all your bills because you don't have profit yet, then what you start doing is tracking what you are spending your money on, and are you getting a big enough return on investment on that money? Meaning, are you getting a 5 times return on every dollar that leaves your business? Is it bringing back $5 or $10 more? Or are you spending $1 on something, whether it's a lead or to sponsor something or whatever, spending $250, it should bring you back $2,500 to $5,000. Well, that means if I'm going to pay $250 to sponsor something, as a business person, I want to set it up so that it gets 1 sale from that one thing. That gets me a 10 times return. So it's not that you don't sometimes support, something as a charity kind of deal where you're donating money, but any business money you spend, you want to get a return on it. So if you can donate money to a business and get a 10 times return, that's the best win-win for everybody. Because if you do make money, you make another commission check off of that particular item and it was a donation of some sort, then you can redonate some more money back to them. So you actually do want to work on getting a return on investment. All right, anytime you guys see me take me a drink, just unmute and jump in if you have any questions about anything in particular. But Gary says the money is good for the good it can do. And again, when you look at what your big why is and what you're doing, as you make more money, you will be able to do more good things. There is a lot of stress behind money, especially when you're starting in real estate, ramping up your business. You don't have it consistent yet, and you're trying to get out of the hole, and not sure how your bills are going to be paid. So money can definitely cause stress on people, individuals, marriages, a lot of things. And that is why, again, 60 to 80% of all real estate agents end up failing out of real estate after about 3 to 5 years because they didn't manage their money. So this is going to show you kind of what most people do to get in trouble and how you would really look at it if you were a financially sound person. So commission comes in $9,000. The agent gets $5,760 after cost splits, whatever that is with their company. They put that in their bank account, which actually goes straight to the wallet and pays bills. Because especially when you first get out of real estate, you paid probably about $2,000 to get into real estate, so you're already in the hole. And then you've spent whatever you've spent to get some business going, so you're kind of even more in the hole. So your first $5,600 check might go right towards just getting out of the hole and paying back everybody that believed in you and got you in real estate, got you through school, you know, whatever, wherever you took the money from to get signs and to get the lockbox and all that stuff, and you spend it all. And there's nothing that goes into your business savings account. There's nothing that goes towards taxes. Where if you're setting up a financially sound business, when that commission check goes in, that 5760, instead of paying it to Jessica Campbell, it's paying it to Jessica Campbell LLC, right? So that check is made out to Jessica. She puts the business portion into her business account. She pays herself her minimum salary out of that. And actually, I would put the whole 5760 into that business bank account and then pay your personal piggy bank from your business bank account the $4,032. Now, once you do that, you put the money through there, then the business pays you your minimum salary. Now you have to set aside your taxes and put some money in your wallet to spend. And out of that is your state and federal and your self-employment and all that other stuff, right? But that it looks like $2,400 versus the first example of $5,600. It's like half. So you're going to be lucky you're not going to get half of the total commission. When you figure up 3% on the sale price, you're not even getting half of that. You got to cut out 30%, and then you're getting half of that at the end of the day. And if you're not doing that, the only thing that you've got happening in your business is you're not putting the money back into your business, and you're treating it like the first scenario. And that is, again, where most real estate agents get in trouble with taxes and stuff, is they don't put away. Oh, so I got to give you the secret on how this works and what this looks like. It's simply this. You may have a bank that you have a checking account, your personal checking account. You're going to go to your bank, and if you have a separate business account, kudos, that's awesome. But we're going to tweak that just a little bit more based on what I shared in the book, E-Myth Real Estate Agent. We're going to set up 4 accounts, 4 business accounts. And one of them is going to be, this is just showing the business side of it, but it's showing the capital account. I'm trying to get here close enough so you can see. We've got, and it says over here, reward, money market, and commercial checking account. But really what you're doing is you're setting up 2 business accounts. One is going to be your capital account. That's where all commissions get deposited into this account. It could be a free checking account. It could be a money market account. The thing with a money market account is that it might accrue a little bit of interest while all your commission checks are sitting in there. And hang with me, I'm going to explain this here in a minute and then I'll recap it. But I call that my capital account, right? The next one, come on, focus in, is the checking account. And that's where you pull money out of, whoa, I'm going backwards, out of your capital account into your checking account to cover your expenses. See if I can get that to focus in again. If I hold it real still, it should focus. Come on, baby. Well, I think that's as focused as we're going to get. It basically says only what is needed for expenses for this month. So now I'm going to take it one step further. You got your capital account that your commission checks all go into. You got your business checking account. The only thing you're pulling into here is, say, on the 1st and the 15th of the month. That's like you'll accumulate your bills when they come in. You usually have several bills that come in on the 1st, and you got stuff that comes in through the month, but they're not due till the 1st or the 15th or something like that. So you're going to pay one chunk of your bills on the 1st, and then you're going to pay the second chunk of your bills on the 15th. And then it rotates every single month. Once you figure out what bills come in during the 1st to the 15th and the 15th to the 30th or 31st, you're going to know what your budget is and what you need to have in your business checking account to pay your bills. Now, I'm talking about business right now. Capital, all commissions in, only pull into your checking account what that amount is for those 2 weeks. And that's all you're going to put in there on the 1st, and that's all you're going to put in there on the 15th. Whatever is left over, if you don't have to touch it by the end of the month, is your profit. Okay, that's your profit from your business if it's still sitting here at the end of the month and you didn't need it. chances are when you're first starting out that you might have expenses higher than your income. You're not bringing in enough income to cover all your expenses, because all we talked about is business here. We still have to do personal, right? So if you're not covering, if you have to clean your capital account every single month, then you don't have a profitable business yet. You may be getting all your bills paid, but you have no profit. And if you're coming up short so every so often, and then you're picking up the next month or two, you still don't have a profitable business. So the way to fix the profit is to add more sales, enough that you have money left over in this account, the capital account, every single month. Now let's go over to your business checking account. Capital, all commissions go in. We pull out on the 1st and 15th what we need to pay. One of the things that I said you pay is pay yourself a salary. Well, I didn't say it, Gary did, and everybody else who runs businesses say pay yourself a salary first and then pay all your expenses. Because if you don't take care of you, then you're not going to be able to take care of the business. So you pay yourself your minimum amount you need for that month. Now that, I would suggest you start a personal capital account, right? So that you can have fund money and slush money. And then you have your spending account, your checking account for personal. So that once my salary comes in, again, I may pull out on the 15th what I need to pay my bills and do all my stuff. If there's money left over in here from my salary, that's fund money or bonus money or investment money or whatever, right? But I pull out the 1st and the 15th out of my personal capital account, what I need to pay my bills. These two methods, for a profit and loss statement, you're basically able to know right away when you are out of budget. If you've spent more money than you were supposed to spend, means that your capital account or your expense account, your checking account, ran out of money before you paid for everything. 1st through the 15th, we pay some bills. So there's still a little bit of money in our account. But if we paid the bills and then we bought an extra TV and spent some extra money, took a vacation, and now it's short and we can't pay all the bills, then we have to go to the capital account and pull more money in. Well, it causes you to stop right there and think for a second to evaluate what is off on what I'm spending. What did I spend money on? Or what did a spouse spend money on, right? You just know that from a business perspective that you are noticing that you are out of budget because you have it budgeted. You have your base salary paying yourself out of your business checking account to pay all your personal bills, what you need to get by, your absolute bottom dollar stuff. When there's money left over in your personal capital account, you can do fun stuff with it. All right, let me stop there for a second, and hopefully I explained that simply enough that you followed me. So let me just get a check-in. Did I do okay? And were you able to follow me through the whole thing? If you can let me know.
Yes, but I do have a couple questions, and you might have covered this. I'd hop off for a second.
Sure. Uh-oh. I might have you in a bad signal area.
You don't have any money, and the commingling thing. Can you hear me now?
Yes, try it now.
Okay. So when you first start your business, you're not making any money. You have expenses, obviously. Can you take personal money and put it in that account to get started? Is that considered commingling too? Or do you have to donate or borrow money from yourself or?
Yeah. Well, so first of all, yes, you're investing your personal money to go to real estate school, get your license, all that stuff. And this is actually great that you're asking this question, because what I did at one point, this was now 15 years ago, my brother wanted to get into real estate. And I had been coaching people in maps and other things and teams and agents that were struggling. They were trying to get out of the hole. And it was about managing their money. This was before I wrote this book and knew about the 4 accounts and how simple that would be. And so what would happen, what I did was I wanted to start a real estate business with $0 invested, because I saw too many people being told where to put their money. You should buy leads, buy this, we'll help you grow your business, we'll help you do this. And I personally did all that stuff and they never paid off. They never made me a 5 to 10 times return. So if I would spend money to buy some leads, sure, I might catch a deal or two, but at the end of the day, I was still behind. It didn't make enough money for what I had paid to get the business. Does that make sense? So when you're looking at this, I wanted to test it, and I wanted to see if I could start a real estate business with no money out of pocket. So my brother said, I want to get into real estate. You just tell me what to do and I'll follow your lead. So what we did was here, and I know this is where I got to sound like a broken record. I said, you're going to write down the name of every single person you know in a notebook. You're going to find their phone number, their address, and all I want you to do is talk to people every single day. And he just got his real estate license. And I said, this is the critical part. You're going to just talk to people every day. You're going to write them a note. I'll manage the database from behind and see that you're putting people in every single day. And we got a 6-month investment here. So he's talking to people, and he's talking to 5 people a day. And he literally did it. This is why I know the model works beyond just me, that after he was talking to 100 people the first month, 100 people the second month, connecting, writing notes, and then the drip plans were running to stay in touch with them, he started picking up a deal or two. It's like, yeah, we are thinking about buying, and he would be out showing somebody a house, and we'd sell a house and he'd get a commission check. To answer your question, at this point in the story, we aren't spending any more money. All he's doing is calling people, talking to people, and writing notes. I mean, there might be some minimal stuff with postage and things. So yeah, you got to buy postage, you got to write the note, you got to buy some notes, but that is pretty cheap. And he did this for 6 months. In that 6-month period, he probably sold about 3 or 4 or 5 homes. Now, I did exactly what I said earlier, where you pay yourself and live off of what that split would be. So his real estate business in Lincoln, Nebraska was generating the money, or keeping all the money, and he had to live off of 50%, because the team structures at that time were like buyers agents were on 50-50 splits. And so I wanted to see, first of all, could you live on the split that teams are paying people? So he would only get 50% of the commission, even though he's in Lincoln generating all the income, but it's under the Korn team model. And what we did was we saved that money up until we had $2,000. So his first 2 or 3 sales, he took half and lived off of that. Now he had to put his taxes away out of that money, but out of the money that stayed behind, we had about $2,000 or $3,000 in there, and we bought 10 signs that were logoed the Korn team and all that, Lincoln, Nebraska, and all this stuff, right? So we built the money up through the first few sales in the first 6 months. We weren't spending money. We were just calling people, getting into relationship, and you will make some sales, because if you talk to 100 people, you're going to find a buyer. If you talk to another 100 people, you're going to find a buyer. If you talk to another 100 people, you're going to find a seller. So it's going to happen just by doing the manual labor, right? So again, we wanted to start with 0 money invested. We built up the money, bought the sign. So now we had the image and the logo. And now at this point, he's still adding the 5 people in a day. He's getting a couple buyers, because the first 100 from 6 months ago are now churning out some more. And he added a new 100, so he's churning out another one. So his business is starting to grow. He got that business to around 2 to 3 sales a month. Once the next 6 months, once we had about $6,000 in that account, in the business account, and he's living off the other side, we bought an ad in the Homes magazine. So I'll tell you, this was 15 years ago. We bought an ad in the Homes magazine, and we tracked that, because we weren't putting our own money into it. And even if you are putting your own money into it, you need to pay yourself back whatever you put into your business. Your business needs to pay you that money back, and they probably should pay it back with interest, in my opinion. That's what they would have to do if they went and got a loan. If your business is separate from you and you put your personal money into it, the business is borrowing money from you, paying it back at an interest, right? Or if you're tapping into, I have so many people that they're fortunate enough to have some kind of nest egg or fund to work from. The problem is that they're just tapping into this fund, paying for things, and they're not tracking the return to get the money back or to put the money back. And unfortunately, what happens is you get down to the end and the money's gone, and all you've been doing is spending on stuff that wasn't generating money, and you're out of business again. So that's where you have to be careful. So in this scenario, we bought an ad. and we were tracking that ad. We were paying $1,000 a month for this ad. It needed to generate $5,000 to $10,000 in commissions, which is 1 to 2 sales every single month. And if we went 6 months and spent $6,000 and never got a sale from that ad, we're out. We're cutting it out. We just lost $6,000 of the business's money, not our own money. We lost the business's money. But if we made $12,000, or not 12,000 at that point, if we made 5 to 10 times return, we would have made $30,000 in commissions from the ad, and we tracked it like a smart business person would do. We would keep the ad. So does that help understand that question a little bit better?
Yeah, I think so. Because I guess my thing was, when you start up, obviously you don't have any money in the business, but you're getting your license. And my first sale ever, or my first, real estate transaction ever was a listing. So I had to start off by buying signs and trying to market the listing without having any money from real estate, any income.
Yeah, so when we started there, we borrowed the in-house company generic signs because we didn't really need a sign with our logo on it. When you're first starting out, you don't have a marketing image, you don't have a brand, you have relationships. And so again, I'm going to go to my grave saying, until you got a master list going with that list of people and the phone numbers and the address that you call out of every single day, and move them over into relationship and write them a note, any other way to make money is going to cost money to make money. But you don't have to do that in real estate. You just have to stay in front of them and have enough conversations with enough people. And again, you can call for sale by owners and expireds and all that other stuff if you want to try and skew that in your favor. But what a lot of people are doing in this industry is the industry has taught us all, buy the leads, buy the leads. Those leads are crappy leads. You can call the same people you have, not spend any money, and make way more money. Your profit on not spending any money and talking to your own list and getting business from it is a infinite number percentage return on spending $200 to make $2,000, or to spend $200 and then whenever these people who are selling you any kind of program to get business say, well, it's got to ramp up, it's got to get going, so you're going to be paying on it for 6 months. Well, you get it 6 months in. Do you know nobody that I know in our industry that waited 6 months for something to cash in said, oh my gosh, I got a 10 times return at the 6th month? No, they're lucky if they're getting their money back, because that marketing just doesn't return. It's a 1 to 2% return when you mass market. When you do the MREA and you get into the relationship model, you connect with people, write the note, put them on an 8x8 and a 33 touch, you get 2 pieces of business for every 12 people you're doing that with. So that's where I would say you put all your effort. Every hour, every minute of the day that you have free, if you spent 4 hours a day just doing that, you will make 10 times more money in real estate than somebody who's buying leads or just doing the normal thing. It's a struggle to get out of that. So the relationships are definitely the way to go without having to spend a lot of money up front. So if you have that money, just make sure you're borrowing it from yourself to your business, and keep you and your business separate in that thought process. Anything else that you want to ask on that or get more clarity on?
No, I don't think so. Thank you.
Okay, so let's break down what this looks like. Financially sound business example. If you have a transaction, and this might be a little high on commission, we might be about half that, but in a $9,000 commission, the net check is $5,760. $2,419 goes in your pocket. That was the fiscal side that we showed, where they paid to the business and then they paid to themselves. Oh, and that was the other part. And my book went flying off the desk, and I thought I was done with it. That under the MREA models, when you look at these models here, this is bringing in $2 million worth of real estate, paying out all of these expenses. And one of the things that you'll find in the MREA book, I had a simple graphic of it, it is 60% of your commission check is going to be gone. It doesn't matter which way, how way, no matter what you do in real estate, when you get a commission check, the goal is to get to, the MREA goal is to get to 40% profit. And I'm going to tell you that in all my years of coaching top teams throughout the company, I don't know why it keeps skipping to that. Where did that little formula go? That sitting in a room with probably, I don't know, 300, 400 of the top agents in Keller Williams, and Tony DeCello, to the whole room, the top producers in the company, he's talking about profitability. And he says, how many of you, raise your hand if you are really, truly running a business model that you are netting 40%, right down here at the bottom, 40%. One person raised their hand. Most people are running at probably 23 to 28%. There might be some good teams that are running at 32% because they're not sticking to the 100% millionaire agent model. Their profit is way less. So in this example that I'm showing you, $2.4 million, you are going to have 700,000 go out in cost of sale and 700,000 go out in expenses. And that's going to leave you $1 million net income. That's 40%. Now, what that really means is, to put it in perspective, maybe just take the zero off. So to make $100,000 a year in real estate, I'm going to spend $70,000 on expenses, and I'm going to spend $70,000 paying somebody to show houses or listing agent or whatever it is. And I'm going to have to generate $240,000 worth of commissions to net $100,000 in commissions. And the cost of sale, well, we'll talk about what the cost of sale here is in a second, but that's your buyer's agent, listing specialist, that kind of stuff. Let me actually move through this. I wanted to make sure I showed you the 40% profit, because if there are teams out there that pay 50-50 splits, and what a lot of those people, the team members, don't realize is they feel like they're losing a lot of commission. But anyone who is running a business is going to be lucky to end up at 40%. You're probably going to be around 20%, which means they're spending 80% of their money to run the business, to pay people, to run advertising, to do whatever. If you're at 20% profit, you're spending 80% of your money. So when somebody's on a 50-50 split, that person needs to bring enough value that they're making up the 10% that they're short. The business is giving them 10% at least more than they should. And even if they were getting a 60-40 split, where the buyer's agent was getting 40 and the team was keeping 60, all they're doing is breaking even with the team. They're bringing no new benefit to the team to do it. So why wouldn't the team just do it themselves? Unless they were so busy they just can't handle it. So start thinking in terms of that too. If you're on a 50-50 split and you know it costs 60% to run the business, that owner is giving away more money than what because they gave away 50% back to a buyer's agent, for example, and they needed 60% to cover their expenses. So they are banking that that person is going to pick up some extra business that they were not getting, and they can maybe keep their expenses under control so that they can get that to even out. But that's the crazy part about this, is how much is spent on all that stuff. So let's talk about these MREA models a little bit, and jump in if you have any questions. But when you look at your income, your gross commission earned, that's 100% of the GCI. When you take out your expenses, it's 30% is going to, and it's total sales. So when they say 30% cost of sale is a buyer's agent that's on a 50-50 split, for example, there was business that came in from the listing side, and the agent was keeping 100% of the listing commission. They were paying out 50% or keeping 50% of the buyer side. So that averages out to be about 30%. But whatever that is, if you pay yourself like you would a team member and live off of that, then at least you're putting money back in your business to reinvest and grow your business so you can get out of the starting gate. And then 30% on operating expenses. And they list out all the different things from marketing to rent to all the different things. And marketing's like a 10% amount. If you don't spend at least 10% on marketing, then your business isn't going to grow very well. But the net profit is 40%. So when you take this in terms of a commission check, you got a $10,000 commission check, $3,000 in cost of sales, $3,000 in expenses, you end up with $4,000 profit. $6,000 disappears every single time you sell a house. 60% will not show up. And it's going to be higher than that unless you're following the MREA models to a T. And that's textbook, following the model. So that's not real easy to do unless you've read the book so much you've mastered it. Couple other things just to understand money a little bit. Income comes in, we take our expenses out, and profit is what we get left. That's the flow of money. But what you want to do is when you're planning, you want to plan how much business you need to make to profit what you want to profit. So if you want to make $100,000 selling real estate, work it backwards and know that your expenses are going to be around 60%. Now, as an individual agent, 30% of that buyer's agent fee, that cost of sale, is going to be you. So you're still going to take out your expenses, though, your business expenses of about 30%. And that's going to show you how much you have to generate. Whatever those two are, you need to figure out what the average commission check is, how many sales that would take to net what you're going to net. And there are different things. There's different ways that income's coming in from real estate. So in that real estate business capital account, which is really just a checking account, 4 checking accounts: capital, business checkbook, personal capital, personal checkbook. Money flows from into the capital account, out to your business expense account, pay yourself a salary, and then pull in here what you need to pay your bills every month. And whatever's left in here and here is your money to play with and or your money to invest back into your business. That's your profit in your business, right? But what would go into that account? It could be listing commission, sales commission. If you get any referrals from agents, if it came from real estate, it goes into the business account. You get paid from that. The business generated the referral, not you. And you could have leasing income and that kind of stuff too. I will tell you, with profit sharing, I actually have that in a separate account in a bank that I do not have online access. I didn't set up the online account. I don't go look. It's out of sight, out of mind. So it's just there accumulating money every single month. So I try not to even pay attention to what's in there. The only time I ever know what my balance is in there is if an emergency comes up and I've got to go see what I've got in there, if that's one of the avenues I can use if I have to get this emergency paid for. So otherwise I leave that out of sight, out of mind. But income from your real estate business can come from multiple sources, and it all runs into your business or your capital account. Your cost of sales are going to be your commissions paid to the office, right? Your royalty fees, your cap dollars. And when it says commission splits to employees or independent contractors, if you're treating yourself like a buyer's agent and like a listing specialist, and you're paying yourself for doing that role, that would be you. You could be the cost of sale. And that actually is the way Gerber would say, separate you from your business. They're two different things. You're working for the business and everybody's working for the business. You'll find that if you do ever grow a team, people don't like to work for somebody else, but if they're working for the business and they get, their stuff from the business and not you personally, it might get a little more buy-in on the property. We actually at one point with a group of agents used to have mascots, and ours was Snoopy, and we were the Snoopy's gang, and Snoopy is who we all worked for. In fact, being the rainmaker, nobody was working for me. I was working for Snoopy. When I went on a listing appointment, I was trying to make Snoopy money. And anytime we showed a house or did whatever, we were making money for Snoopy. So that's one way to look at it, to where it keeps you running your business like a business. But any referral fees also come out of that. So in the beginning, I showed you that worksheet just to figure out, and this is really good just to sit down and do. Sit down and figure out if my average commission check, or actually even do this on your next sales while you're capping out. Have this page, this line right here is your company dollar, where you got your commission check that comes in times 30% minus the 6% equals your net commission. And you keep running until these totals equal 20,000 and 3,000 or 6,000. Done. 6%, 3,000. Once you get that, then you can start using this formula here, the next one down. And that is actually if your royalty or your GCI haven't met. If one's met and the other one hasn't, you keep running the other one on there until you collect that 20,000 or 3,000. And once you hit 20,000 or 3,000 in those two boxes, then you start using this one. Whatever commission check comes in is yours. It's 100%. So it's a good little check box thing to use to actually keep you on track with your money. So building the future, that's where we say work this thing backwards, figure out what you want to make from real estate. And you need to determine here, what is it worth to stay in real estate? I know like a lot of new people struggle and they're like, should I even be doing this? Well, you need to figure out what you need to net or make from real estate to make it worthwhile to stay in real estate. And then when you work the numbers backwards and you put that into like an average commission check, it will tell you, you need to sell 20 homes a year. So, or 20, let's just say 24 homes a year to make $100,000 in real estate, right? If that's the case, you have to sell 2 every single month. And if you have a month that you don't sell 2, or even a month you sell 0, you're not going to make $100,000. So you can know right now, right then, that you're not going to make $100,000 selling real estate. Do you have to make $100,000? And if so, then you have to sell 4 next month, not maybe. You have to sell 4. And honestly, this is where it gets real. You just need to go on more appointments. The only way to get on more appointments is to talk to more people. And if you have to do that for 4 hours a day until you book an appointment, if I was literally looking at what I needed to make and I ran it through the formula and it said I had to do 4 sales a month, then every single week on Monday, I am starting with 8 hours on Monday, just like a job. And I am just going to call and call and call until I get an appointment. I have to sell 4 houses per month. So I have to have 1 or 2 listing appointments or 1 or 2 buyers pre-approved, ready to buy every week to make sure I close for a month. So if I don't pick up 8 hours on Monday, if I get it in the 6th hour, then I'm done and I can go do something else. I'll come back Tuesday and I'll do 8 hours until I get the next one. Once I get those 2 by Tuesday, now I can take the Wednesday, Thursday, and Friday and go do whatever I need to do in my business to, marketing plans or working on this contract, that contract, this system, that system. But if I need to make X amount of dollars in real estate, I have to book those every single week. And that's the only priority I have until I get them. You don't wait until the end of the week to see if you hit your goal. You hit your goal and sometimes you might have to make 8 hours of calls every day, 5 days a week. And if you don't hit your goals, then you need to look and see, is it a scripting issue? Am I not closing right? I mean, you're going to be learning this stuff as you go to get better and better and better. And believe me, you spend 2 days, 8 hours making calls until you get your 2 appointments that month. You're going to be really good at appointments. Here's what that looks like. If I wanted my net profit goal to be $100,000, I divide that by 60%, which is the expenses, the total expenses that I would have. So $100,000 is my 40% profit. I have to generate $166,000 for expenses. Now, if I divide that by 40, which is the amount I want to net, I'm going to have to generate $416,000 in commission sales to make $100,000. right? So then I divide that by the average commission. In this particular case, they're using $7,500. I'm going to have to sell 56 properties a year, 56 properties a year to make 100,000 the way this formula is rolling out. So once you know, and actually, if your average commission is 5,000, that number's got to be higher, right? This is why I say create the master list. You have 100 sales sitting in front of you right now. There's 100 people moving per every 1,000 people that have ever met you in your life. There's 100 people moving every single month. So that 416 is 56 sales. Oh, let me get back over here. And if by the time I pay my royalty and my cap, multiply that by 30%, which is your office expenses, you've got 124,000. You have to generate $416,000 to net $100,000. So best practices, just to kind of recap all this stuff, you really need to get clarity on what you really need to make in real estate. What could really hurt you is not having a goal in mind and or a reason to even have a goal. If you don't need that, that's a blessing. But if you don't know, if you don't figure out what you need to make money for and why you're doing this every day, if it's literally just to keep busy, and you don't need the money, then it's gonna just be a roller coaster ride. There's no way you're gonna build a consistent, persistent growth or grow it into a business. If that money is to invest, then what would you really like to invest in? You want to invest in an apartment building that's $2 million? You can start setting your big goals to figure out how much money each year you need to put away so you can do that. But set your personal and business budgets. I'm telling you, when you do the capital account, you only pull money. The reason why that one was a money market account is because I can only take money out of there a few times and they start charging. So I only wanted to take money out on the 1st and the 15th. But if I screwed something up or I forgot to put an expense in my budget to prepare for, so I ran short on money, I'm paying the bills, paid my salary, started paying bills, and then the money was empty. I still had a couple bills left. Then I need to figure that back in there and get my budget in line. So know what your business and personal budgets are. And I would only pay them on the 1st and the 15th. And then I would adjust that as I needed to. Set up your business entity. That would be actually those 4 business accounts. Like go today, set up those 4 checking accounts and get your business into an operating account and an expense account, and then funnel your money through that way. Which it has right here too. Open additional bank accounts for taxes, expenses, and savings. If you do the 4 accounts, you could set aside another tax account next to your personal account in that same area. If you want to set aside your taxes, set aside 30%. If you just leave it in the capital account and you're not using the capital account, that would work too. But I don't think you need an expense account and a savings account and all that stuff. Just try these 4 capital accounts first. Once you get capital left over, then you can go open up a couple more accounts to start putting money in at the end of the month. So you get that profit out of there so you don't spend it back in your business. Download the MREA chart of accounts. It's a detailed breakdown of every expense that you would have in your business. That's like a level 2. Don't even worry about that until you get your 4 accounts set up. By the way, the 4 accounts also could prevent some pretty nasty things from happening, like embezzlement, coaching top agents, and being a Keller Williams office owner myself. We were embezzled by our front desk girl because she had access to the accounts. If the capital account only has access to you, never give that up. Somebody can still manage all your money in your business, but they have to tell you twice a month what to put in the capital account. And if they come to you in the middle of that time frame and say they're short, you need to know exactly where every dollar is, but nobody has access to the full money. They have to come to you to get that done. And if they're screwing up every single month and not getting enough in there, something's wrong. So that could help prevent embezzlement. Hire an accountant, a CPA, probably the best thing you can do. I know it stinks to pay money for that, but they do take taxes out when they pay you your salary. They send you a check just like you're an employee, and they take the taxes out. set the dates to calculate and pay your estimated taxes, or just have the CPA or accountant do that. And then preparing your future for insurance, savings, investments. Once you start having money left over in your capital account, and until I did that, I didn't invest money in anything. I didn't have life insurance policies. I didn't have a will. But once that money started accumulating, once we got our expenses under control so we could cover expenses and leave money in our account, our capital account every month, I didn't have money to invest. I was just rolling check to check, like that very first example. So, all right, I'm going to go ahead and put in here the survey. If you like this information and you're anywhere around the chat and you can do the survey, click on the survey and let us know what you thought about the stuff in this session. Any questions on any of the content or material? Does this give you a little bit different perspective on money?
Definitely.
Awesome. Was it worth it today? Was this good that you came?
Yeah.
All right. Even if it was in the car and it wasn't your ideal situation, hopefully you still got some good information. And anyone listening to the webinar too, guys, this is like, it's pretty simple. Those 4 accounts are like the key. If we have the eMyth real estate agent books at the office that you can get a copy if you don't have one and you're a KWOLB agent, and you can read chapter 4 on this money thing. And it talks about just money, getting your value for your money, what you get for your money, tracking your money, and it's all in that MREA lineup. So thanks for being here today and investing in yourself, and let me know if you have any additional questions.
Thank you.
You bet.